Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, it's going to be linked in the top right hand corner of the video. Watch that before watching this one so that you have more context. Also, I want to mention that there are two donation links down below in the description. If you want to support Ukraine, you can do so by going to the official websites I have linked down below, and you can donate directly to the funds. The money does not go through me in any sort of way. So thank you all for supporting Ukraine. Thank you all for supporting my channel and staying with the channel. And let's get into the TA. So jumping into the daily chart here on TradingView, as you can see, we have two Fibonacci retracements set up. So one is relatively large and the other one is quite small. So the one that's larger has the swing low that we printed in July of last year and the swing high here that we printed in December of 2020. Now, as you can see, our technical target at the 1.618 here was at 24 cents, slightly above that. So as soon as we were starting to lose this low here that we printed last year, as soon as we broke down here in June of this year, I was targeting that level. Obviously, we didn't get there. We managed to bounce from the 1.414, which is another level that you could be targeting. So you basically have three extension levels here: the 1.272, the 1.414, and the 1.618. The 1.272 is your minimal target. Then you have the 1.414 and your technical target, really, which means that often, or I would say 60 to 70% of the time, you do retrace to the 1.618 target after you have lost the first fib level here. Whether it's to the upside or in this case to the downside, the 1.618 is your technical target after you lose the first fib level. So here in this instance, we managed to bounce off the 1.414. We didn't drop as low as the 1.618, which is fine. You know, it's not going to work out every single time, right? That's why I say dollar cost average. So as we drop, you just keep on buying little bits and pieces, and your average price is going to be somewhere here. And once you start recovering into the bull market, you're going to see a nice appreciation, right? Or you can just wait for red days, and when there's blood on the streets, you could just buy in with big chunks of your money. That's also a good strategy. And that's really what I do. I dollar cost average through the drops as well. And if I see a red day where everything is dropping 20%, I'm going to put in, quite a bit of money into the markets, because I'm dollar cost averaging for the next, 2 to 3 years, because once we get to the next bull market, the gains will be insane. So stake your crypto, or, hold it on a cold storage wallet, secure your crypto, because not your keys, not your crypto. Remember that. So I would advise you taking the crypto off of exchanges or centralized exchanges, but I'm not a financial advisor by any means. So on the smaller fib here, as you can see, we did bounce off the 1.272. We're going to remove the larger fib just so that it's not as confusing. So as you can see, we had a support level here at 74.5 cents, and we had the 1.272 at 76 cents. So the last update that I did on Matic was on August 29th, and that is the last time we touched the 1.272 before having another impulsive move to the upside. Then we had a little pullback below the 1.414 and below the 55 daily EMA, which is the red line over here. And then we had another move to the upside into today's September 11th. And as you can see, we are on our way to the 1.618, which I think could be the top of this little move, because until we get our inflation data, I do think we're going to be pumping a little bit, because some people want to take profits. I'm talking about the big players that potentially want to empty their bags, or some of their bags at least, or they want to get people bullish, like really bullish, and they want people to start opening long positions so that they can liquidate them, just like the exchanges and the market makers like to do. So, just be cautious here. Not a lot of bullish news in the market right now. We have lawsuit cases all over the place, and we have, FUD and FUD and FUD being thrown into the market. So just be careful, have some money, have some cash, and never buy all into crypto. So 97 here, or 96 and 6, I would say, if you want to really be precise, it's really hard to get the exact number of the fib level with the price tag sometimes. So 96.58 is your technical target here at the 1.618. If we do break that, then I would target the $1 price tag here, which was the high that we printed back in the middle of August. And I am, currently planning to swing trade some altcoins, including Matic. I dropped in all of my sell alerts in or on Patreon, I should say. So if you want to get my trade alerts, get my low cap gem calls, request technical analysis and request videos, then feel free to join Patreon. It's linked down below in the description. It's a great way to support the channel, obviously financially, and it is a great way for you to request a lot of things and get more exclusive content. I'm also planning to start a podcast for Patreons. So yeah, that's something that I just wanted to mention real quick. So like I said, if we do manage to run into the 1.618, from there, I would probably target the 1.414 first. And if we start dropping a bit lower, I would start targeting the 1.272. Now, if you're not really planning to buy into Matic right now, which I'm not, and if we're going to see a huge pullback on Bitcoin, to $17,000, $18,000, I would start buying up over here at 63 cents and 54.5 cents. So these would be the prices that I would be targeting, because we never really back tested them as support after we broke out here. Well, at least the first fib level you didn't, because the 786 here, you can see that you broke out and you had a nice back test of support. You broke through multiple resistance levels. You only back tested the 1.272. So 62.5 cents, I think, is a level that we might come back to in the future if Bitcoin sees another capitulation. And that's a huge if, but still the markets, don't seem very bullish. These little pumps here don't show me anything, right? This is not your bull market type of pump, and obviously it could be, right? But just applying logic to charts and applying logic to the markets, I don't think anything is going to be going into the bull market, in the foreseeable future, at least, until the end of 2022. Now, I do want to jump into the Binance website so that we have more oscillators. But before we do that, actually, let's take a look at the second fib level here, which could be our next target at $1.25.5. And that is our next kind of resistance level and next target after the 1.618. And we also have a sell zone here from $1.30 all the way to $1.40. And that is because this is where we bounced from in May, in January, in March, in April, I should say, not May. And that's where we capitulated in April. So we haven't back tested this level or this yellow zone as a resistance. So that is potentially what we could do here. If we continue on with this pump, we get rejected, and then you come back down for a higher low, hopefully, because we don't want to lose this low that we created here in June. So that's pretty much it for the daily chart. Let's switch over to the Binance website. So jumping into the Binance website, I have another Fibonacci retracement, and I have a buy zone for you here, anywhere from 39.5 cents all the way to 26.5 cents. That's a pretty good buy zone for you guys. And that is the buy zone, because if you go and extend it to the left side, you can see that this is the trading range here that we had back in April of 2021. So this is why I'm targeting this as another buy zone. And this Fibonacci retracement is set up with the swing high in November and the swing low in June that we printed within this pullback that we had, this summer. And considering that this is our low and we're not going to go any lower, if we do break this low, then we're going to go and switch up the fib a bit. But for now, let's consider this our swing low. You have the 0.5 resistance here at 96 cents. Okay, slightly above 96 cents. And then you have the golden ratio over here, which is something that you need to be wary of. So $1.25 is going to be your golden ratio. And that is a very important level for us to break, because as you can see with these touches over here, this is an incredibly strong support area. And this is the golden ratio, which is usually the strongest zone with the most resistance. So I'm pretty sure that if we start pumping, we could probably run into the golden ratio if we continue the pump, and we could come back down to the 382 or the 236 here. So watch out for these two levels at 74 cents and at 53.5 cents. Those would be good support levels to pick up some more Polygon Matic. Watch out for this golden ratio. Draw this Fibonacci retracement on your chart so that you can see. We obviously need to break through the 0.5 first before talking about the golden ratio. But, just take a look at the charts yourself and keep an eye on those levels. Now let's switch over to the weekly chart here. I do want to show you a little pattern that we're in. We talked about this in the last video. So as you can see, we are in a very nice falling wedge here. And what we're actually doing is we're kind of breaking the resistance of the wedge right now. So if we continue doing that and we continue breaking it, we could see a major move to the upside, because this would be a break of a major diagonal resistance trend line that we have tested twice, once in May last year and once in December this year. So if we start breaking this, I would not really try to swing trade. I would see where this would go, right? And if you get overextended here on the weekly chart, take some profits if we go into the overbought zone. Otherwise, I would just wait, because we could see a really, really strong push for Polygon Matic if we do end up breaking this. But of course, we could just obviously turn around over here and drop back down into the oversold and, you know, lose this low and get into the oversold area, which is below the index of 30. So yeah, a couple of scenarios here. Like I said, if we break, great, but if not, great opportunity to buy into Polygon Matic, because I'm very bullish on that project. The weekly stochastic is a bit overbought. We're starting to recover down. As you can see, I do have the length of the stochastic at 28 and not at 14, which is the default setting. So keep that in mind. I did that so that we could have less false signals, which means that we're not going to be getting overbought and oversold as quickly or as often as we would. And as you can see, the MACD printed a bullish cross back on July 18th. So that was a good indicator to take a look at, because the last time we did that in August of 2021, we did have a bit of a pullback here afterwards, but we ended up moving very, very nicely into November, right? And in December. So this could potentially be the same thing that we see here for Matic, but obviously with less volume potentially. So that is pretty much it, guys. Thank you all for watching. If I missed anything important on the charts, please let me know down below in the comment section. I'm going to catch you all in the next video. Peace out.